Results out from Barnard Jacobs Mellet this morning show a small fall in revenue to 253 million rand for the year to March, but profit fell 56% to 13.3 million. Basic earnings a share is down 56% to 18.9 cents. Joining me now with more is CEO Andile Mazwai. Andile, thank you very much for coming in.
No, thank you very much.
Andile, I would have thought with the strong rise that we saw in the equity markets last year, we did see a substantial rise from March to March, that you'd have done pretty well in that environment.
Yeah, it should have been good for us. Equity markets were up, JSE number of shares traded were up, but the value traded on the JSE was actually down. And that's what we earn our commissions on. So unfortunately for us, we still haven't come out of the down cycle. Our industry is still experiencing that.
So, okay, although we saw those record volumes coming through, and of course we get messages all the time from the JSE about the number of volumes going through the market, not impacting directly on you just yet.
No, a lot of what you see is algorithmic trading. So as more and more people get electronic trading, so you find that instead of buying, let's say, 1,000 shares at a time, the program will split it up into lots of 100, so 10 times 100, making up 1,000 shares. So that's what really drives the number of trades going up in terms of the JSE numbers. But as a stockbroker, not only are you getting less commission because the number of volumes, the value trade is lower, but because the number of hits is higher, so our cost of doing those trades is also increasing. So the margins were put under pressure given the technological move that we've seen in the last while.
When would you expect to see a recovery in the margins in that case?
Look, a lot of what we do with our margins has got to do with a fixed cost base. There really isn't all that much wiggle room with regard to our cost base unless you start changing your very platform. You start saying that there are certain units, for example, research that you're not going to do, by way of example. So a lot of it has got to do with the turn in the markets. We would be optimistic that the markets are going to turn. But what we did do, though, which was quite important in this result, is that we've made a decision to get out of the institutional stockbroking market and focus squarely on private wealth management as well as asset management.
And of course, we chatted recently about that deal that you have struck with Renaissance.
Yeah.
When does that take effect? Will that take effect in the current financial year? When is it going to start reflecting in the first 6 months, second 6 months?
It was really so difficult for us to produce these results. Although the deal has yet to be consummated, we're awaiting regulatory approval. So within the next few weeks, we expect that we're going to get that regulatory approval. So this is something which happened post our year end. However, in terms of IFRS, we have had to state our financials, circling that business as a discontinuing operation and therefore make the comparatives. So when you read the numbers, you pull out these numbers, you take out last year's numbers, and you just find that there's no comparison whatsoever, because they're prepared on two different bases.
Well, I was looking at those numbers. We had diluted headline earnings a share from continued operations, 2.7 cents down from 13.8. That's the business you're keeping, so that's your private client
Correct.
business. You had from discontinued operations, the institutional business, from 22.5 down to 17.8 cents. So not really seeing that bigger fall in the institutional business.
Yeah, and again, unfortunately, in the way that these results are prepared, when you do it according to IFRS, it forces you to put certain things in one box and in another. In the real business sense, we are actually very optimistic about PCS being the future engine driver of our business. The securities business, the institutional business, has been a very good one. Last week, we were rated for the third year in a row as the #1 research team and as the #1 dealing team in the country. So there's no problem with the operations of the business. It's got to do with how you capitalize it. As a small independent firm, the inability to go out there, make prices, make markets, is something which was then affecting our profitability. So the deal with Renaissance from a business unit will solve it for that business, and I've got no doubt that it'll be incredibly profitable in the hands of Renaissance. We had, on the other side, had to put our hands up and say, we really can't give that business the sort of muscle that it needs to grow. Therefore, rather sell it and keep the business of the retail business, FinSettle and Corporate Finance, which in our hands we believe we can do a good job with.
And of course, they're inheriting quite a nice team of top-rated analysts, aren't they?
Well, that's precisely what they came for.
I mean, you talked about the fixed cost base in your business, and obviously, once you've sold the institutional business, you're still going to have quite a high fixed cost base for the private client business. How do you bring that down, and when will you be able to bring that down to reflect the size of the new business?
That is something that we just simply do have to work at. Many of the things are difficult because a lot of it is centralized head office costs and structures. We will be forced to bring that down, so we will have to rationalize our business. Over the next 6 months or so, in fact up to 12 months, we will actively have to resize our business according to what is left in it.
So looking at your next set of financial results, they're still going to reflect quite a high cost base for the smaller business, and it'll only really be in the following financial year where you get a true sense of how your new business, private client services and FinSettle, is going to really operate.
I think that's a fair reading of it. Certainly within the next 6-12 months, it will have a negative impact. Call it restructuring costs that are going to come through in our results.
Now, just looking at private client services, value of assets under administration up from 25 billion to 35.5 billion. So quite nice growth that you have seen in your assets over the period. I mean, are you continuing to see them grow as we go into the new financial year? What's the picture like now? Because the markets are a bit more volatile, aren't they?
Yeah, we've got a fantastic platform. We've got fantastic people. We had this big, hairy, audacious goal that we were going to grow our assets by tenfold over a 10-year period, and we've actually done it, coming out of these sorts of numbers. So yes, we continue to attract positive fund flow, and it is a very good business for us. Where it was beginning to bump up against some sort of resistance is the fact that we had this institutional business, which is a wholesale business and a retail business under the same umbrella. So without the institutional business, we expect that we're going to give that retail business more legs to go.
And of course, your full focus, where would you see it going into the future?
My own focus.
Yeah.
Oh,
Yeah,
as
full
a firm.
focus on the retail business.
Yeah, no, definitely. The retail business, there are 3 parts. It's the retail business, we've got a settlement business, as well as corporate finance. But by far and large, it is the retail business. We distinguish between wealth management, which is individuals that money that we look after, versus asset management, where it's on a pooled basis. We really haven't been in asset management, so that's a brand new opportunity for us to get into. I thought you were asking about my own personal future.
Well, that too.
I'm at BJM.